one, they can start shorting oil, which if they do that and it produces a short squeeze and oil continues higher, they end up in a very, very bad spot. Second to that, they can start dumping U.S. Treasuries, right? If they're selling off U.S. Treasuries, that puts pressure on the dollar, increases the value of the yen against the dollar. That's another option. That also would basically make it imperative that we start launching stable coins here in the U.S. in order to be able to drive that demand domestically so that the Fed doesn't have to print money in order to buy those treasuries. And the last thing they could do would be to raise interest rates, which is what I've been saying the whole time. That's what they need to do. They need to raise interest rates to about 1.5. They're currently at 75 basis points, or 75% of 1%. They've become very hawkish. They are saying they are going to raise rates. They're going to step in. If there's volatility in the FX market, they're going to do what they can to mitigate the risk for oil continue to rise because of the conflicts in the Middle East. And we've just had a G7 meeting. The largest economies in the world have put their world leaders in a room in order to discuss what's about to go down here, which is inevitably the reverse carry trade unwinding, which will be hugely deflationary. So right now, everything it's inflationary, right? If energy costs go up, things cost more to move, things cost more to produce, things cost more in general. The problem with the reverse carry trade unwinding is you're going to have liquidity sucked out of markets. So to the tune of about $10 trillion coming back to the Bank of Japan. Warren Buffett and the Fed stockpiling yen at this point in order to be able to navigate that situation when it inevitably does come to pass. Those are all tells for me, right? Like, don't watch, what they say, watch what they do. They are stockpiling yen to be liquidity providers in that situation. So we know it's coming. It's just how long do we have until that's going to be the case? Your guess is as good as mine. Unfortunately, these indicators have been around for a while, and we still haven't seen things transpire here. I don't know what they're waiting on. Like I mentioned last week, it could be that they codify something around the stable coins as far as yield goes, or at least they come to an agreement that's going to be in the Clarity Act. I do not think we need to get the Clarity Act across the line in order to see the implementation of these networks and protocols. April 1st, you have the OCC giving banks the ability to hold digital assets on their balance sheet. Big deal. Big deal. Will that cause price appreciation? Who knows? But it should cause more demand for the assets, Solana, Bitcoin, ETH, and XRP, which is what the BIS is going to be designating titles for, or what they are here in Q2 of 2026. So, all of that's in play. Seems very timely that this would be occurring now, and that it likely will play out in the not too distant future in order to roll in this new financial paradigm. Bank of England also has a go live date for their new financial system in April of 2026. Who would have known? All these things kind of culminate. Hang out here. If you do get value from this, please like, subscribe, share. It does help the algorithm in the channel, and it is much appreciated.